The year is wrapping up fast, and right now is the perfect moment to get your money in order so you can enter the new year confident, prepared, and financially stronger. So today, I'm sharing 9 smart financial moves you should make before December 31st to level up your finances and set yourself up for success. Let's jump right in. 1. Count your cash reserves. First, take inventory of all the cash you have available, not just in your main bank account, but everywhere. This includes checking accounts, high-yield savings accounts, any cash equivalents, even that emergency stash you forgot about. Remember, liquid assets are things that can be turned into cash within 1 to 3 business days. Once you calculate your total cash, compare it to what you should have. Your emergency fund amount plus any short-term savings goals. If your emergency fund should be $20,000 and your short-term goals total $10,000, then your target cash amount is $30,000. Before the year ends, make sure your cash situation is clearly defined and organized into separate accounts. 2. Grab every bit of free money. If your employer offers any sort of free money, make sure you take it before the year closes. Most common, 401k match. Many companies match up to 3 to 5% of your salary. If you're not contributing enough to get the full match, you're literally leaving money on the table. If there's no 401k match, check for an Employee Stock Purchase Plan, ESPP. Some companies let you buy their stock at a discount, sometimes 10 to 15%. That discount is basically instant profit. If you believe in your company's future, ESPPs can be an amazing opportunity. Just make sure you understand holding periods and taxes. 3. Total your debt and assets. Next, list out everything you owe. Car loan, credit cards, personal loans, student loans, anything with an interest rate. Sort these by interest rate, highest to lowest. This will help you prioritize what to tackle first next year. Then list all your assets, bank accounts, investments, retirement accounts, property, business equity, valuable items. Subtract liabilities from assets, and boom, that's your net worth. You don't need to check it every month. Once every quarter, or even once a year, is enough for most people. 4. Reevaluate the big 3 expenses. Your 3 biggest spending categories are usually 1. Housing, 2. Transportation, 3. Food. These alone make up 60 to 70% of most budgets. Look at options like moving to a slightly cheaper apartment, refinancing a loan, cooking at home more often, using public transportation, canceling unused subscriptions. Cutting small coffee habits won't change your life. Optimizing the big 3 will. 5. Use tax loss harvesting. If you have investments that are down this year, tax loss harvesting can save you money. The idea is simple. Sell investments that are down. Use the losses to offset gains. For example, if you gained $6,000 on one investment but lost $4,000 on another, you'd only pay taxes on the net $2,000. Just remember the wash sale rule. You can't buy back the same stock within 30 days, or the loss doesn't count. Losses you don't use can roll forward into future years, which is extremely helpful. 6. Review and renegotiate bills. Before the year ends, call your service providers and ask, do I qualify for any discounts or promotional pricing? You can do this with cable, internet, phone bills, insurance premiums, even your credit card interest rate. A 10-minute call can save you $100 a month or more. 7. Maximize tax-free accounts. Use every tax-advantaged account you qualify for. Health Savings Account, HSA. The only account with triple tax benefits. Just make sure the money is invested, not just sitting there. Roth IRA. Grow your investments tax-free and pull them out tax-free later. If you earn above the income limit, just use the backdoor Roth IRA method. These 2 accounts alone can supercharge your long-term wealth. 8. Know your savings rate. This is probably the most underrated metric. Your savings rate equals how much you save per month divided by how much you earn per month. Most people have no idea what their savings rate is, but you should. Aim for 15 to 20% at minimum. That includes investments, retirement contributions, ESPP contributions, money you save automatically. If you know your savings rate, you know the direction of your financial life. 9. Set your 2026 financial goals. Finally, decide on 1 or 2 major goals for 2026. Examples: build a $10,000 emergency fund, pay off $8,000 in credit card debt, save for a house, max out your Roth IRA, start investing consistently, increase your income. Pick a number, pick a deadline, then reverse engineer it. Too many goals means no progress. 1 or 2 goals mean success is almost guaranteed. As we close out this year, remember, you don't need to be perfect. You just need to be intentional. Small steps compound into major financial wins over time. If you want part 2 or a downloadable checklist of these 9 steps, comment year-end ready, and I'll make it.